Well, summer trading is finally upon us. And I gotta say, after a pretty cold and nasty winter here, it probably couldn't come quick enough. But, really, summer trading, it can mean slow markets. But if you think about it, just like in life, we just can't get lulled into going through the motions when grinding price action takes over our trading screens. So let's have a conversation about how markets can change their behavior pretty quickly. And before we do, if you trade options or you're thinking about adding them to your trading mix, you can grab this free PDF here, and it goes over the top names that we like here at Netpicks. The link's above or it's below in the description. So let's get back to talking about summer trading, and make sure you hit the subscribe button and poke around our channel. We have a ton of videos here. I find summer is like a crapshoot in terms of the type of trading day we're going to get. They can move from being pretty quiet and ranging markets to being very busy in directional markets in a pretty short space of time. And this can happen in the summer when the news is released and the markets get a jolt, or it can just happen leading into a highly anticipated risk event such as the Fed meetings or the Non-Farm Payrolls release. In fact, this could apply just as much to the reverse scenario, where traders are anticipating a quiet market, so they get their business done early, and it creates a very slow environment for the remainder of the session. So whether trading is slow or it's fast, the issue is that it can be a struggle to trade effectively when the market switches gears quickly. So is trading about preparation? I think it is, and I believe that much of trading comes down to preparation. For example, too many traders come into work on what they feel is going to be a quiet day. So they fail to plan for the possibility of the market breaking out. So then errors are easier to make when you're trying to assess, as well as plan while the market's unfolding at a rate that can put you to sleep or speeds up. So it could be that you fail to spot the breakout, and you fail to spot that at all, and you just play the range extremes. So it could be a case that you just don't believe a break enough to hold on to the position. And so you only take a few ticks, and that you miss a good entry location. Well, then you start chasing the market until you finally get a trade executed just when that market turns around. And there have been times in the past where I got to admit, I've been caught right at the top of a move. But the problem with these types of issues is that it can carry over to your next trade. And the big part of being successful at trading is minimizing errors. And by minimizing errors, you decrease the compounding effect that they can have. So if you're going to trade on any day, you have to effectively prepare and account for the possible market conditions and how things can play out. So you have to know what to look for, to prepare for. So I want you to imagine that you think today is going to be a quiet day. Well, then you might look at preparing for the following scenario. The primary market session that opens up, traders test one way, then the other. Once the initial trading is complete, further tests of either side to explore for action takes place. So if no new interest is found at the extremes, so there's no breakout, then the market might just be a range-bound day. So if the market starts to move quicker, you watch for breakouts and for possible news reports. In the event of a breakout, you enter the market only when a pullback happens to a good location because you want to minimize risk. This is a basic outline of just one scenario, and you have to fill this out with market specifics and your own trading method. And it could branch out into different scenarios very easy. So what if the market initially tests one way, but then finds a whole heap of orders waiting to be filled? What would you look for, and how would you attempt to trade that situation? Now, even though it's pretty simple, lots of people don't do it properly, if at all, before they trade. And especially on what they think is going to be a quiet day. But then if it does move, the potential is definitely there to get into some trouble. And generally, the simpler things are, the less value people put into them. Now, do you agree with that? I certainly do in my own life. And if you didn't prepare, just take a day off. The other option in the case of the potentially quiet day is just do something else. Don't trade at all. But if this is what you decide to do, but you still look at the markets in some way, you have to be disciplined to not do anything. Because if you didn't prepare, don't trade just because the market starts to move unexpectedly. That only leads to one thing, and that is problems. And if you do prepare, but you choose a specific set of conditions which are required for you to enter the market, well, then just stick to them. Don't take a trade because you're bored. And the last scenario is when it's going to be quiet and people want to get their business done early. So the market moves in a sustained direction for a while and it just dies. And if you haven't covered this scenario in the context of the broader market, then you could be banging away at a perfectly reasonable trend continuation trade when really your entry is somewhere towards the wrong extreme of what is about to become a new range. And you also have to assess the possibility of a one-move session. And that can be difficult, especially if you're a new trader. But there are a few simple clues to help you figure out that this scenario has a high likelihood. The time of year, that's pretty important. So when lots of traders are likely to be on holiday, those stuck in the office probably don't want a long day, and they don't want to get into trouble in a quiet market right before they go off on holiday with the family. Because we all know there is nothing worse than having taken a big hit in the market than having to seem happy in front of your family or try to come up with something when they ask why you're in such a bad mood. Then there's whether or not there's a scheduled economic release or a speech, holidays, holiday Friday, or whatever. If the market moving information is due to be released, then there's a much greater chance that it's going to be busy. So when it comes down to being able to run with the market when it switches gears in times like the summer, preparation for different scenarios prior to trading is critical to find. You fail to prepare, you prepare to fail. And I can't emphasize that enough, just how important that is for trading. So in fact, I would say that most issues arise for traders either directly because of, or at least relating to preparation in its various forms. So make sure you prepare for each and every trading day.